So we got banks collapsing, and this is what the head of our treasury has to say about it. You know what? We got extreme confidence that the regulators after this meeting, you know what? The 14th largest bank in America may have gone under, but we got confidence. And that's all we really got to say. And the last thing we're going to leave you with is we have, again, full confidence in the abilities of the treasury and our tools we have, in the ability to respond to the situation that the U.S. banking system remains resilient. They followed this up by saying that the U.S. economy needs to retain more cash in order to stay available and liquid enough to handle these circumstances. So I don't know if the answer is they have full confidence or they need more cash. Again, you can go look at all the statements, but that's what was said there. Now, obviously, we have a lot to talk about when it goes into the chart, specifically with the Nasdaq. What a day, in fact. We had that bad news come out yesterday. And let me tell you, it just rolled into today. I'm feeling pretty good. Trades are looking even a little bit better. But let me tell you, we got some big winners on our hand, and we have some big trades, in my opinion, that are just starting to heat up. So let's get to it. Now, before we get into that juicy content, I have to ask you to do two things. Consider liking and consider subscribing. Every single day, I come here on the channel. I give you the breakdown of the market, what I expect. And as you can tell, the past week or two, we've been looking for downside, obviously, as you can see, but I'm always going to be upfront and try to be as honest as possible with you, the viewer, unbiased every single day. Even though I may have a short position, I'll still tell you the possibility of us bouncing our key levels onto the upside and give you both sides of that trade so you can always stay prepared, as well as giving you a good mix of fundamentals as well as technicals. I don't believe in just going all in based on the RSI, because that would be stupid. We have to understand core values that hopefully paid off for me going to college. Also, too, just so you know, the newsletter will be dropping this Sunday. It gave you a rundown of everything you needed to know, every key level, S&P futures, stocks we loved, the VIX, which we got to talk about today because this thing went crazy. What did we say here? Recent spikes light towards 24 and quickly getting rejected. If we got above 24, what did we say was going to happen? It was all in the newsletter. Nvidia, Apple, everything was here in the newsletter, so you were prepared. Also, so you know, Discord link is down below. We try to make as much free content like the newsletter, Twitter, these videos, but Discord, there's not 12 spots, there's only 5 spots. It must be glitched. There's 5 spots left. Those most likely will get filled. Make sure you check it out for the $30 tier. That's all we have available right now. Let's get back to it. Now, when we get into this, we can look at the charts, and I don't want to spend an unnecessary amount of time on the charts today because there's a lot we got to talk about, and I don't want to miss any of the big stuff. Now, we're going to come back to these charts, but a few focal points here. What do we want to identify first? You are clearly in a downtrend. You are clearly very, very bearish. Okay, spoiler alert, right? The trend continues. Lower highs, lower high, lower high, lower high, followed by lower lows continuously. This is the basis of a downtrend structure. It is actually the opposite of what we had towards the upside, right? When we were in our upside trend, higher highs and higher lows. Now we're getting lower highs and lower lows. Okay, so this is exactly what you want. Now, before we, before we go too far into anything else, technicals, I know it's what most people here come for. On the 2-hour and 4-hour, you can see we broke the 200 SMA on Nasdaq, tried to retest, and then broke back down. A little bit more clearly going into ES, S&P futures, you broke down, retested, pushed back down. Going into SPY, what happened here? Even more beautiful, you broke down, retested 2 times, pushed back down. QQQ, what happened here? A little bit different story, broke down, retested, pushed down, but it was a little bit further, had to go down, but you're still on everything. You retested, you're back, you're pushed down. So that's what we need to understand. What also do you know from this? Getting under the 200 has been critical for the ES and Nasdaq specifically. This could be very bad and lead to new lows being established, but we need to keep going on, and we need to come back to this here in a second. Now, I want to talk about a few things that were said by Biden. Okay, now I have Biden's full speech here, but I'm going to talk about specifically CPI here in a second. But what did Biden say? Biden's economic aide says there is an opportunity to improve our labor force. I want you to understand the non-farm payrolls today came out, how do I say, bamboozling? I mean, straight bamboozled. 205 was the expectation. You beat it by basically 50%. I mean, how much better do you want to get? Your unemployment rate, this was kind of a good part of the market right here. Unemployment rate came out at 3.6%, up from 3.4. So it was like a good note. Unemployment rose, but jobs increased from non-farm payroll. I'm kind of like, what's going on here? Like the data doesn't really make sense. Not ideal. But nonetheless, going back to what he said, or she said, whoever it may be, there's an opportunity to improve our labor force even more. So apparently they think unemployment can go down further. Okay, next. This was the kicker. This was the ultimate statement. What do we know from this channel so far? What do we talk about repeatedly? In order for inflation to get handled, we have to see unemployment rise. Okay, unemployment, it's got a not 0.2%, it's got to rise a few percent, right? That's what we need it to. Now, what is going on over here? The White House is in this trance of doing some type of hard drugs, apparently. Because when we look at what they're saying, it makes no logical sense. White House economic advisor, not going to pronounce your name because I'll butcher it and I'll be called some type of name for butchering your name on accident. Wage growth continues to outpace inflation. And they act like this is a good thing, people. I mean, really, we focus a lot on the charts here, but dear God, the fundamental thesis here can only get worse now. I mean, we are admitting that wages are rising, and I'm not going to say that they're outpacing inflation because that would be stupidity because that's never actually happened. But what I will say is that wages are rising with inflation. At no point in history, going back to the Sumerians and, 2000 BC, whenever that may have been, this has never happened where inflation and wage growth, where wage flows beat inflation in the long term. No, you're going to have to come down. That does not make any sense in an economic standpoint. Every economic class throughout the entire United States, college class, must have been lying to us if this is the case. Straight stupidity. But on the bright side, they finally admit to what's happening and that inflation is only going to continue to go up. Going back to Biden. This is what got the initial bounce today. When we go to the charts, you're going to see it really clearly. This is literally his exact words. Anyway, and this is Biden talking. I'm optimistic we're going to get the CPI next week. Hopefully we'll be in some solid shape. Now, I will say, news outlets twisted what was said here to get what they wanted to be out. And it really pushed a narrative, right? That Biden said CPI was going to be good. And these are the only 3 mentions of CPI in his entire speech. Well, first of all, we don't know what the CPI is going to be this week. And this is not my English, this is his English, I'm just quoting him. But it's been down. Interest rates have been down. The inflation has been down for many weeks in a row now. Going down again. But we'll see what this next CPI is. I guess it's Tuesday or Monday. Tuesday, Wednesday, next week it's coming out. God bless your soul, Biden. That was his interpretation of this. Now, there's a few interesting things in what he's saying here. And I want to go back to this middle one. Interest rates have been down. I assume he's talking about mortgage rates, kind of, and how they're going with this right now. Let's talk about this. Mortgage rates, and this is just going back to November. So obviously November they spiked at 7.2, 7.4%, and they dropped. They did. He's right. But what has happened since the CPI report came out? Interesting. You started rising from 6.3%. This is just an average. In some states it's higher. Some states it may be a little bit like Texas. You can probably get one around 5.7% right now with decent credit. You've rose. You have made up all that ground. You could argue that you rose back to levels at high levels back above 7% quicker than you dropped in the previous 3 to 4 months, right? Because you've gained a whole percent here in less than a month's time. Okay? This is not me. This is just the data. Okay? We cannot lie. We cannot manipulate the data that's out there and just go look at whatever you want to look at. I mean, do whatever you want. I don't mind. So That's where we're at now. Okay. That's the fundamental aspect out there. That's where we've been operating. Tuesday next week, I'm going to tell you. Tuesday, Wednesday, major days. Major days. We have CPI, we have PPI, very big days. They will set the tone, okay? But it's important to understand what's happening in between this time. We have banks in extreme turmoil. We have concerns across the board. We have defaulting among European banks. And it seems like it's getting more and more stressed, as well as the tailoring aspect of which we had Powell talking about. And we're seeing this heavily affect these banks now here in America. So not only do we have CPI and PPI concerns, but now we have this bank issue, which I was wrong. I did not think banks were this strapped for cash. It's not the big banks. It's these smaller tier banks and a lot of these regional banks. But again, be careful. Now, let's start talking about what's happening here. First, on the day, looking at SPY, looking at volume coming in here. SPY, dear God, help us. We love talking about volume, and you got volume today. You had over 100 mil volume by lunchtime. You ended the day, we still have a little bit of time in after hours. You're at 170 million volume. Going back, I'm not going to be able to go back far enough to see the last time we had this. We had 140, 130. Try to see the last time we had this much volume in the market. Spoiler alert, we're not going to be able to find it. It's going to be a while. We're already back in May of last year. So, yeah. There's not a day so far. This is incredible. It'd probably be February of last year. It's only going to go back a year here on Yahoo Finance. I would anticipate, right there, 71, 72, right here. So this was your day. May 5th, Cinco de Mayo, arriba. That was your last day. What a fiesta that day was. So that was the last time. Almost a year, 10 months, give or take, of time that we've had this much volume to the downside. Fascinating. What does this tell me? In my opinion, this being on a Friday, it tells me there's a lot of concern in this market. It tells me there's a lot of people that are repositioning for expectations of downside. Why? Because now we're starting to see this play out. Now we're starting to see the ugliness we've been trying to talk about here for so long. So let's get into some of these charts, expectations, and of course, giving you some of those hot plays, right? Now, the first things up that I want to talk about is going to be VIX. And before we get into anything, VIX had a little bit of a run today. On the 1 hour, we had some extreme volatility. You shot all the way up to 29 roughly here on VIX. Came back down to 24. What have we been saying here on the channel? Where's the big level you got to watch? $24. Say it with me, $24. $24. Keep getting questions about VIX. I don't care about your questions. I love you guys. I want you to succeed. I want you to win, but pay attention, please. Okay? I want to answer good questions. I don't want to answer the same questions. VIX. Every time, look how we reacted when we mounted. You mount about 24, you shoot up to 34, 35. You break above, you can see here, you sit there for a few days, 2 days, boom, shoot up to 35. Break back down, remount it, push back up to 35, 37. What happens here? You retest 24, push down, mount, push up to 36. Come back down, remount 24, push back to 33, 35. What happened here? Same thing, push above, retest, 35. What happened here? Pushed up, rejected. Pushed up, retesting. Can we get continuation at 34, 35? Big question there. Pretty interesting to see what's happening here. Going over to yields. This was the most concerning part of the day when I was watching this with my shorts. We've talked about the inversion that's happened here, okay? Inversions, right? We're still fully inverted, the 10 over the 30. It's my favorite thing to look at. Now, I'm going to give you a little bit of a lesson, something that we've talked about previously. If you're new to the channel, or if you're on the channel, you've been here before, just skip past this. You might not want to rehear this again. Looking at the weekly time frame here. This is the inversion chart going to the dot-com bubble, the housing bubble, 2018, now where we're at. You can go back and track 2018 when we had the dip on the market. There was a nice little dip. But we have a very big issue on our hands as far as rates because of what happened here. Typically, when we see the inversion happen, it's gradual. You push up, down, up, and then back down. Obviously, you can go track all the previous ones as well. But when we look at what's happening now, it's more concerning because we only raised rates, and we started raising rates at a 0.8% inversion, and that's where we've basically sat at fully inverted, or at least above 95% inverted from the 10 and 30 year for the past 3-4 months. This is pain. This is really bad for the market. I don't think this is over. I think 10-year, 5, 2-year are going to continue to move upwards. I think this is just the beginning. Also, TLT, nice bounce off of 100. But again, I don't think this holds. I don't think this is sustainable. I think TLT will break back below 100, and that's where I think more pain will start to ensue. Understand this. Be vigilant. Pay attention. DXY. You saw DXY drop on the non-farm payrolls and with the unemployment rate come out. Okay. I think DXY bounces back this coming week as well. Keep it on your charts. Keep it on the radar. My opinion. Okay. Going into Nasdaq, because it's what everyone wants to see. It's what everyone's interested in. The Nasdaq. We're back. What did we say when we were bullish? Okay. When we were on this bull run, go back. You can go rewatch those videos. I recommend you do. When we were bullish trading the upside to 12.9, we said we need to establish a lower low on higher time frames. We need to break the structure. And I believe today we did that. We broke back below 11.85 and we're sitting there pretty good right now. Okay? This is your 200 MA on the weekly. This is my next target, 11.68 roughly, 11.7 on the Nasdaq. If you break below this level, I have to start siding. There's a high % chance we make new lows on the year. And I know the crowd just went wild. You're going insane. You're like, Tyler, you think we're going to get new lows? If we break back below the 200 moving average on the weekly time frame, we've already broke the daily, highly likely. Going over to ES, what's happening here? You have more room down, 3,700, 3,720. Now, what I will say, I think we need to watch ES a little bit because ES has made lower highs better, but you're still breaking back down. You can see you obviously broke that trend here as well. You can see clearly broken that trend, breaking down violently, not feeling very much love here. The leading cause here, we talked about this yesterday. What started this rollover? It was XLF. XLF is starting this rollover here because we're seeing the financial sector getting decimated, destroyed. It's awful right now. Now, what did we say yesterday? In my opinion, the next major sector that if this rolls over, you will see new lows on the market. It is semiconductors, SOXX. You need to be watching this. Very similar structure, people. Very, very similar. If we identify where we're at and how we're moving, is it going to happen in a day? Not likely. But we need to be watching it. SOXX has been on a tear since October. Okay? A very nice resurgence. Reminder, look at NVIDIA. Disgusting. Great run. Over 100% on the upside still till this day. AMD. Great run. $54 back up to almost 90. Great run. Fantastic. Semiconductors in general, the strongest area of the economy. Banks were doing good again as well. But now I think it's time. If these start rolling over in tangent, I do believe new lows will be established on the ES and the Nasdaq. We'll see mass selling on ES if semiconductors start to roll over. So I do believe the indexes will be very important here. Now, I know we're already going a little bit longer, so let me run into some of these stocks. I will have another video on Sunday going over more of the indexes to keep you prepared, and obviously we'll have some futures open up Sunday night. Favorite plays right now, still for me, reign supreme. AMD. I think you're getting a little bit of a double top setting out here. My initial target is going to be the 200 SMA on the daily. It's important to understand this. The daily, it's about 78. But the thing to watch, if you break down and break 76, which I know we're getting ahead of ourselves, but if this breaks, it's going to be brutal. Okay. If you break 76, I believe you'll get a touch down to your next demand level, which is about down here on the 4-hour time frame to around $69 to $67 roughly. It'll happen quick. My opinion, don't attack me. Don't sue me, not financial advice, do your own DD. I'm in this position heavy. I could have sold for about $3,000 to $4,000 in profit today. I held because why? I see the vision, risk to reward. It's the name of the game here. And I want to give you another visual. If you're not really familiar with risk to reward, why I talk about it so much, I want to show you this right here. Don't post these to flex gains. And I honestly don't like to post the gains nearly as much. Very rarely in comparison will you see me post my wins compared to my losses. I don't like to focus on them, but I like to show you the difference of risk to reward. Our last loss was Nvidia. Remember, $1,200. On Tesla, just on this day, because it was only calculating this, it calculated a little bit more because it was around 43%. But we also had the 170s with JReam, so maybe that's where I calculated it from. But as you can see here, about $8,000 in profits, showing exactly where we entered. Look at the running P&L. We were red very minimally in comparison to how much we ran up. The risk to reward, people. It's all about putting yourselves in good situations to win, right? It's not saying I'm going to make you rich by any means. No, it's all about you putting in the work and make sure you're doing your research when it comes to stocks. But that's why I always say, I'm looking for plays that have great risk to reward. For instance, when I went short here, and I'll have all this pulled up whenever I'm done with this trade on AMD, I got in around 85.2, okay? My stop loss is if we make new highs around 89, 89.3. My downside, easily down to 78. If we break the double bottom, down to lows of 68. I'm putting myself in a winning opportunity. The risk in comparison to the reward makes sense. That's where you need to start focusing. Focus on the value of your trading. So favorite plays, AMD, number one. Number two, I mentioned CrowdStrike yesterday. It's looking pretty good. Contracts are a little wonky. I didn't trade it. But anyways, going on a little bit further. Adobe's interesting. It's down a lot, but I think you got to be watching Adobe here. Adobe has earnings coming up. I believe it's Wednesday. They also announced that they got the DOJ, I believe, blocked the acquisition of a company that they were going to acquire. Okay. I believe these guys have some gnarly downside. I think this could get ugly, to say the least. I am targeting this thing to get smacked and destroyed. Now, again, if I'm playing this, I'm not going to try to play earnings crazy. I'd be sizing for zero to like a small position, a little bit of a lotto, but also just keep it on your watch list, okay? Adobe, I think they got downside. I think earnings could be bad as well. You can also see they almost rejected perfectly near that daily 200 SMA as well. Next up, going a little bit deeper. Again, NVIDIA. I don't have NVIDIA, I have AMD, but NVIDIA is still at the tippity top of the list. If you look at NVIDIA, it's quite honestly one of the most beautiful charts out there right now. Looking at where we are, it's a clear-cut ascending wedge. You're breaking down out of it now. You have a gap at 210. In my opinion, your clear-cut target's near like 170-ish, but even 190 is another great target as well. NVIDIA has tons of downside. Keep it on the watch list. A little bit better as well. Wells Fargo. We talked a lot about this one yesterday. Going to the daily chart. Look at how you're moving. This is the monthly. I'm sorry. you have a monthly, weekly. It's all a bear flag. Breaking down. You broke down out of that today even further. If you got in yesterday, $42 down to lows of 39.8 roughly. Already breaking down. I think Wells Fargo will get smacked. But I'm going to tell you right now, if you're focusing on banks, I believe you need to be really focusing not on XLF. This is hurting the market. Don't get me wrong. But KRE, regional banks, people. These are the ones that are at risk, okay? I'm telling you, these things can get destroyed. You're not even at your 52-week low. Well, you are at your 52-week lows. These are your COVID lows on a 27. This is ugly. I do believe also, though, too, if I'm looking at a support level here, what I'd be watching, you can already see almost bounced near 47, roughly 46.5. That's target number one. We break below that, I'd be looking for a flip and push down to local lows. 33, then of course 27 on CRE. I'd be focusing on regional banks if I was looking to short any type of bank. Lots of downside opportunity here. I'm going to tell you right now, it looks really bad. But I'll give you one upside trade. I'm not looking to trade the upside, but if I was looking at anything, it would be Boeing right now. They just announced some pretty good news. I believe the aviation, whoever's in charge of aviation, I can't think of the name right now, they just let Boeing go back to doing the deliveries of the Dreamliners. This was some of the news that got you really volatile towards the downside when you started dropping from basically 220. Okay, so really you dropped from like 212 down to roughly like 196 from that news, and you bounced back up and you came back down for potentially a double bottom. Boeing, If I had to go long on any name, Boeing's one of the names I like. I think it's low risk. We know their order book is stacked to the brim. We like where they're at. They still have that giant breakout of a yearly downtrend, but that's where I'm at now. That's what I'm watching. I'll see you guys tomorrow for the educational video. Have a good one, traders.